The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and this is our hour to get you ready to either file your return or if you're already filed, fix your return. We want to help you. I'm Esther Gulius, the Tax Lady from EG Tax. I'm joined in studio with Tiffany Fabian. Hey, Tiff.
Hey there. How's it going?
Good. You know, there is only 24 more days until Christmas. No, not Christmas. Until April the 17th. That drop dead. I mean, there is not a lot of time left.
Nope, there is not.
So there's 17 days in April, 7 days in March, and so that's it. And so we want to help you. And if you have, and I've looked at some of the IRS stats, and the IRS is basically flat returns
from last year.
So it looks like a lot of people still haven't filed returns, and so if you're somebody that's getting your stuff together, we're going to this is be a potpourri kind of program where we're just going to talk to you about a bunch of stuff that isn't big enough to do a whole show on, but a bunch of stuff that'll help you save money. Some of these things I know people haven't even done. And I know that if they go back and look at their returns, they'll probably be able to amend a return. I was doing a tax return the other day from somebody that's in Florida. And, TurboTaxi lady. Mm-hmm. And I looked at it and I said, well, you've never taken your sales tax. And she said, well, I don't understand how to even do that. So in her situation, the sales tax was about $1,500 a year. They were in a 25% bracket. So it saved them over $600 a year.
Oh.
So I said over 3 years, that's $400. That would have paid my fee for years and years and years
Why'd
and years.
Why'd she end up using you finally?
I saw her at church.
Oh.
Yeah. God told her to come see me.
Yep.
So I'm Esther Gulius, the Tax Lady. Our offices are open tonight till 5. Our mall offices are open tomorrow, 3 mall offices. Hamburg at the McKinley Mall, the Boulevard Mall in Amherst, and the Niagara Factory Outlet Mall
in the Falls.
And they're open mall hours on Sunday for those of you that can only file on Sunday. The rest of our offices are closed on Sunday. Mm-hmm. And, of course, next week we're open 9 to 9. And I will tell you, we will get her done. And so we want to talk about extensions. We want to talk about some of the things that are going on with the IRS state of New York. But we've had poor Alton, who's been holding here for a long time, and we don't want to go on without talking to Alton. Hey, Alton, how can we help you?
I am calling in regards, you guys always do my taxes, okay?
Thank you.
And so 2013, I borrowed against my New York State retirement.
Ooh.
2015, I left state service.
Okay.
I got last year I got a letter in the mail from the IRS saying that I owe them over $3,000.
And that would be correct if you didn't report the 1099. They should have sent you a 1099-R form with an L1 on it, which would have meant that the amount of the money that you took out from your pension plan as a loan prior to age 59 and a half wasn't paid back. So that would be taxable to the federal. Tax-free on the state, however.
Well, the thing of it is that I left state service and I went out of state, so I was moving around a little bit, and then I came back to New York, and the end of 2015.
Okay.
And so, like I said last year, so I moved around and stuff, but last year I was placed, stationary at one place, and I got the letter last year. So that's probably why in 15 I didn't get the
that's correct.
The letter.
But what I'd suggest you do, Alton, when we do your return, or if we've already done it, just bring in that letter and let them double check the figures to make sure that it's correct against your 2013 return.
Alton, were you moving for a job in those years?
In 2015 I left state service, and yes, I went to Oregon.
Did you take a moving expense adjustment?
No, I never.
So, all right. So here's a rabbit we might be able to pull out of the hat. The moving expense adjustment, if you had gone to seek employment elsewhere and you had fulfilled the 39-week requirement, then the moving expenses are going to be an adjustment against that'll help to cancel out part of that income that they're assessing you.
Yeah, but I don't have no proof. I mean, I got on my 2015 tax return. I do that. I had to work. I worked out there in Oregon. That's the only proof I have for employment.
But some of the thing is completely, it's X amount of miles, so you can do a Google search as to mileage. So the mileage is deductible, and if all you took is the mileage, that's a long trip there and back, you know? So, I mean, let's see if we can't save you something.
Okay. Well, see, what I tried to do is because I called one of those, you know, what that you see on TV, one of those, well, we can help you with your taxes.
Sure.
So, for the IRS. So I called one, and then just the people that I called, they said, well, just contact me because you don't owe that much. Just call them, and because I don't make that much money. Last year I only made like $10,000, and the year before I might have made about $15,000 to $18,000. So I don't make that kind of money.
Okay, but the penalty is not going to go away. See, the unfortunate thing is you may not owe any income tax, but you're going to owe a penalty unless you were disabled. Were you disabled?
No.
Okay. Well, you know what? I think the thing is, Alton, if you want to give us a call, why don't you go to my website at egtax.com, ask the tax lady, send me your information, and then you can send me that letter, and I'll do what I can do on your behalf.
Well, can I just go to your Springville office?
Yeah. Go to our Springville office.
And if they're not helpful, call the corporate office.
Right.
But I'm sure they'll be helpful.
Okay, Alton.
Okay, thanks.
All right, thank you, sir. I think he's got his child with him.
I had a baby.
I know. I'm Esther Golias, the tax lady from EG Tax, 8030930. 8030930, star 930 on a cell phone. See, if you get these letters, they're saying, okay, we got this information.
Mm-hmm.
But you still have that opportunity at that point in time, if it's an open year, which it obviously is to say, yeah, but I didn't do this, and I didn't do this, and I didn't do this.
Right.
And many times you can reduce that letter that you've gotten, that bill you've got, by some of the things you left off your return.
There's somebody I know, and they had gotten one of those letters, and it was self-employment income, but they could reduce it by some expenses that they had. And so you really want to make sure you follow through.
That's exactly right. And we're going to take a short break, and we will be back with your phone calls on the other side. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We got Ed and Larry. Hold it, and we'll talk to you on the other side.
Girl, and you're gone too far, 'cause you know it don't matter anyway. You can rely on the old man's money.
You can rely on the old man's money. Hey, you can rely on EG Tax to get you the best tax information. And I'm Esther Golias, the tax lady from EG Tax. We have 34 offices to serve you. We're open today till 5 o'clock. 3 mall offices on Sunday that are open, McKinley Boulevard and Niagara Fashion Outlet. And all of our other offices are open Monday through Friday, 9 to 9. Starting next week. Mm-hmm. And you have 24 days. 24 days to get your stuff together here so that you can get your taxes ready. So before I get to the phone calls, I wanted to make sure that we talk about the New York State letters that people are getting.
People are getting letters right from the get-go, not wasting any time. New York asking for proof of their withholdings. And so it's true that everybody's like, but they're supposed to get a copy of my New York State.
They have it too.
Yeah,
by jinkies.
I know, but they want you to send in, again, proof of your withholdings from your 1099s, your W-2s.
But the bottom line is, don't ignore it, do it, or else they won't give you your money.
Yeah,
and the longer you wait, the more they stall.
Yep.
So get it done right away. It's a pain in the keister, and then I think it's unbelievable that they're doing that.
The worst part is then it stalls up your refund another couple of months because once they get it, they won't process it.
Also, if you're somebody that's filed your own return and you haven't double-checked to see if it rejected, make sure your return was accepted by the IRS. If it wasn't accepted, it means it rejected. It's like you never even filed it. Mm-hmm. It's not like they give you a gold star on your forehead because you tried. it's not been filed. So make sure whatever the problem was that you fix that. The other thing is people are getting 1098s,
corrections.
right?
Yep, they're getting corrections to their 1098s, and that's because when they were originally produced, they didn't have the PMI on it.
Those are from your mortgage company.
Yep, and so now they're getting corrected 1098s that have the mortgage insurance. I just did an amendment the other day.
And because they changed the tax law in the middle of the year, you couldn't take your PMI before. Now you can take the PMI. So if you're somebody that filed earlier, you can amend your return and get your money back. Also, 1095As.
Yep, people are getting, I just got 2 letters the other day for people, the IRS is saying, wait a minute, we're not going to give you, this guy had a $7,000 refund. We're not going to give you your refund because you didn't put the 1095A. We think you got health insurance through the marketplace. That's what the marketplace is saying. So you need to do an 8962 with your 1095A. And so make sure that you get it into the IRS.
English. The 1095A is the reporting form. There's an A, B, or C for health insurance. And if you got your insurance through the marketplace and you were making payments to the marketplace, they might have been giving you a subsidy. They want a reconciliation between what they paid you or in subsidy against what your income actually is now. And to do that, you have to report what's on Form 1095A. They're not going to process your return till you do it.
Yep.
So if you need help with that, let EG Tax know. And then finally, extensions. Those of you that think that you owe money and you say, I know what I'm going to do, I'll just do an extension. Bah, that doesn't work. Because the extension only extends the time to get the paperwork in. It does not extend the time to pay. So you actually have to go through and figure out what the liability would be and send that in with the extension, or it's not a valid extension.
Correct, for the federal and the state.
So that's just a few of the things we want to talk to, and we're going to talk to Ed, who is so patient. Mr. Ed, how can we help you, sir?
Hi, Esther.
Hi.
I have a question about the New York State tax,
Yeah.
specifically about this payment voucher for income tax returns, IT-201-V.
Yeah.
Okay. I made a slight error in filling that voucher out. In the square that says tax year, I inadvertently wrote 2018. It's 2017.
Yep.
But I enclosed my check, and on the check, I indicated 2017 income tax.
Yep.
With my Social Security number. What do I do?
All right. This is how long ago? Did they cash the check yet, Ed?
No, I just sent it on Friday.
All right. So give it a couple weeks. When you see that it's cashed, call New York State and talk to one of their.
Or I was thinking he could do a conference. I could do a conference call with him.
But ultimately he's going to have to talk to New York State, and then you basically say, "Hi, this is Ed from Tonawanda. I accidentally put 18 in the corner rather than 17. Did you post it to 17 or did you post it to 18? If they say, oh, we posted it to 18, then they have to do a manual transfer from 18 to 17. And it can be done, but you just wait till they cash the check, because until they cash the check, it hasn't gone to your account. And so you'd just be wasting your time.
So wait until they cash the check.
Right, because then you know that they dealt with it and they've appropriated it someplace, and you'll be able to figure out where.
And if they didn't cash the check within a reasonable amount of time, I should call New York State?
No, they're going to, believe me, Ed, they're going to cash your check.
But you want to call New York State to make sure that it's not applied as an estimate for 18 versus your payment for 17.
Right, but wait till they cash the check.
Right. Whom would I call the New York State tax?
518-457-5181. 457-518. 518-457-5181.
518-457-5181. 5181.
Yeah, and you can always call our office after tax season, and I'll do a conference call with you to New York State.
Yeah, because it's just going to end up. It'll be they'll have to manually just change it. But she's exactly right. They could have posted it to an estimate for next year, so that they'd have an opportunity to charge you a penalty and interest. So you want to make sure as soon as they cash the check, you give them a call or give us a call. We'll be very happy.
No
to help
opportunity.
You too. Okay.
Thank you very much.
All right, thanks, Ed. That happens, we're human beings. We make mistakes, right?
Yep.
And let's go to my buddy, Lair. Hey, Lair, how are you?
Esther, I'm doing good. I'm doing good. Just kind of planning a lot. I'll be very brief, guys. First, you say you're wonderful. Of course, you know that already. Tiffany, did you get my care package? You should have gotten it by Friday. Tell me yes.
I didn't get it, but you probably put it to Chris's attention. I'm going to text him right now and ask him if he received it.
And then we'll let you know if we don't get an answer right away, Larry.
Yeah, okay.
But we'll let you know. We're going to let you know sometime on the way back to the radio station. We'll text you back, too.
Okay, sounds good. Listen, two, I'm leaving Monday. I won't be back to the country until middle of May. Now, I mailed in the signature cards to you today, so you'll get that in a couple of days. But, I also have accounts online, so I could go to the Feds or Georgia and pay online if that's best.
Yeah, but the best thing to do is, Larry, is we can contact you by email. So we'll do anything via over the internet that we possibly can. So don't worry, you just go have a really good time.
Okay.
But, yeah, he wants to know. So, yeah, you can pay the IRS online.
And Georgia. You can
and
pay
you can
everybody.
pay.
Yeah.
Okay?
So what do you advise? Should I just, I guess I need to know from you guys, how much you need to pay, so I should just keep in touch by email?
Oh, yeah. Believe me, as soon as we get the return done, we're going to be contacting you right away. So we may be contacting you while you're sleeping because I know you're going to the other side of the world. But believe me, we'll get in touch with you.
That email address that I emailed to you the other day is the same one I'm going to email to you about your return. Is that correct?
Yes.
Yes.
Yeah,
Okay.
don't give it to us over the air, though. Okay.
But that's the one I'm going to email you to.
All right, Larry.
Guys,
Have a great time.
Thank you.
All right, thank you, Larry. That's Larry from Georgia. That's our Georgia peach. That's Mr. Larry. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and we got Dave from Pavilion. Hey, Dave.
How you doing, Esther?
Good. What can we do for you, sir?
Good. I'm over 70 and a half. I'm retired. I'm
Okay.
in my RMDs. My wife is still working. Am I eligible to put anything into a Roth as a spousal IRA?
Yeah, you can do a Roth contribution, provided you're under the income limit. So that would be about. You guys are under 194,000.
Oh yeah.
Yeah, so you can do a spousal Roth.
Good. So I could take some of that RMD money and.
Well, I mean, you're really that RMD money is still taxable, though.
Oh yeah, I'll pay the taxes.
Right.
I can take that. I'm looking for a place to invest it, and I think a Roth tax-free would be a good place to invest it.
Yeah, that's good. That's absolutely great. So the good suggestion, and so as long as your wife is working and has wages, you can do a spousal up to $6,500.
Terrific.
All right, thanks, Dave. Bye-bye. I'm Esther Golias, the tax lady from EG Tax, 8030930. 8030930, star 930 on your cell phone.
I wanted to say that we've heard from Chris, and he did receive Larry's
Yeah, Larry,
tax
he's
return.
got it. Okay, let's talk about some of these miscellaneous things. I'm calling it like creative deduction. And just like that gentleman that called, he wanted to put money into a Roth, all right? And that works for him because he doesn't qualify to put money anymore into a traditional IRA.
Correct, because he's over the age of 70 and a half.
Right, but for many people that have, think about this. Let's say you have $8,000 in your bank account, and you find out right now, and you have a little part-time job. Maybe you're 62 years old, got a little part-time job, really just retired, just started collecting Social Security, and you find out you owe the IRS $1,000. Mm-hmm. You can put up to your wages up to $6,500 in a traditional IRA, and several things could happen. First of all, the $6,500 would be deductible if it's in a traditional IRA, and if your income is between, let's say you're married filing a joint return, it's, let's say, $30,000 married joint, you would qualify for a pension savers credit as well. So you not only get to deduct the traditional IRA, you also get a credit up to 50% of what you put in to your IRA on the first $1,000. as a credit on the back end of the tax return as well. So creating deductions is something is still available up till April the 17th.
Mm-hmm. Very good idea, because then you also get a reduction on New York return too, which is another bonus.
That's right. So I got this example. Somebody's got income from wages of 20, a pension of 10, total income of 30. Their deductions are $6,300 and $40.50. So their total deductions are $10,350. Their taxable income would be $19,650. The taxes are at 10%, $1965. If they put $6,500 into a traditional IRA that reduces the taxable income down to $13,150, they would get a pension savers credit of $1,300. So they would save $1,960 just by moving the money from shelf A to shelf B in the bank. And if you're over the age of 59 and a half, you can take it out without penalty anytime.
Pretty
cool. So that's a pretty cool thing that you can do. All right? And, of course, we're going to talk about self-employed people as well. Let's go back to the phones, and we're going to go to Tom. Hey, Tom, how can we help you, sir?
Yeah, this is Tom. I have two questions.
Yeah.
The last couple years, I've had zero income.
Okay.
At the tax return anyway. The IRS, do I have to send it in if I have a negative adjusted income, even more so after scheduled deductions?
Okay, give me an idea. How is it that you have no income? You're just not working at all?
No, I'm a zombie property investor. I work on dilapidated homes, fix them up, and sell them and hold the mortgages. So
Okay.
I have income from interest and principal, of course, but negative income from the rental properties because of all the work that I do on them. So my income for the last couple of years has been a negative income.
Okay, so you want to, I would suggest you file your return because you have a net operating loss carry forward. If you don't let the IRS know that you're operating in the red, and because you qualify for a net operating loss, you can carry it back 2 years forward, I believe 10 years. And so if at any point in time here you have a big windfall, if the IRS knows you have your net operating loss, then that net operating loss can be called up in the year that you have money, and those losses that weren't deductible become deductible.
I see. Okay. And regarding capital gains, it's still 15%?
It's 0% if you're in the 15% bracket or less.
Oh, really?
Yeah.
Then I don't have to pay any capital gains.
Mm-hmm. Well, you have to do the computation. But on the state of New York, Tom, there is no deal on the state of New York. On New York State, they don't give you any 0% on the first 15% taxable income. On New York State, you pay from the get-go at whatever percentage that you're at. So you want to make sure that you get your New York State return done.
Oh, so I have to do that anyway?
Yes.
Even though I have negative income?
Well, do you have negative income?
Yes.
Okay. I don't know. I haven't seen your situation, but you want to do the net operating loss. If there's no taxable income, then you don't have to worry.
Oh.
You don't have children, do you, Tom?
It's about 15,000. Oh, I'm single.
Okay. All right. Good enough.
Thank you.
Thank you. Bye-bye. Here's the thing. Oh, I guess I got to shut up. I guess the news is on. Wow. I'm Esther Golias, the tax lady. We're going to take a short break for news. We'll see you on the other side. This is Here Comes the Sun, right? Boy, I'll tell you, we can use some springtime here, can we not?
Yes.
I know it's officially spring, but I'm Esther Golias, the tax lady from EG Tax. We have 24 days till the end of April, until April the 17th, the end of the 2017 tax season will be over, and EG Tax wants to help you. Our offices are open 9 to 9 Monday through Friday, 9 to 5 on Saturday, 3 mall offices open on Sunday. And we're going to talk about some, and again, 8030930, 8030930, star 930 on your cell phone. Okay, here's a little tip about if you're self-employed. If you're self-employed with a net profit, even if you have another job with a pension plan, you can do an SEP, Simplified Employee Pension, and put up to 25% away of your net profit into a pension plan. So if your net profit's $10,000, you can do almost $2,500 into an SEP, which would save you a lot of money in taxes. And the important thing to realize is it's still your money.
That's right.
So it is true that you just put it in a pension plan, but the truth is it's still your money, and it can save you like $1,000 in taxes, federal and state, on that $2,500 example. So if you're self-employed realtor, maybe somebody that has a small business, and then realize that in 2018, 20% of your net profit is also going to be a pass-through.
And then not to mention, I had somebody who had net profit last year from this year and 17 from a business. Next year, if they have that same $18,000 net profit, they get the pass-through credit too.
30 pass-through deduction.
Right.
So
deduction.
You can put $12,500 away plus a $3,000 catch-up if you're age 50 or over. A solo 401k plan, and for some of the realtors that are making more money than anybody I can think of, they can put up to $54,000 away in a solo 401k. I mean, that is astronomical.
That's all.
You know? So you'd pay state, and you save them like $18,000 federal and state in taxes. So it's a great way to create a deduction and save money on your tax return. The other thing is, if you're a non-working spouse, but your spouse is still working, maybe you're retired, you could qualify for, unless you're making a whole lot of money, a spousal IRA, and you can put up to 60, if you're over the age of 50 or older, up to $6,500 away into a traditional IRA, and maybe your spouse as well. That'd be $13,000.
Yep.
And again, it's your money, so you're just moving it from this drawer to that drawer.
Yep. I have a client who does this every year, and he has already taken care of it by the time he comes in because he knows how much his net's going to be on his business. Yeah.
How does he know what his net's going to be on his business?
Well, not for the 25. He puts in the IRA, the maximum IRA. Him and his wife do.
Okay.
65.
Sometimes people do IRAs, but they'd be better to do SEPs.
Yep,
and
I've talked to
sometimes
him
people are doing SEPs and be
about
better
that.
off doing IRAs because of the flat
Right.
$6,500. Another thing is, if you have a balance due, the IRS and state of New York is going to potentially assess you a penalty because you're not allowed to have a balance due over $1,000 to the federal. So if you do owe over $1,000, but maybe last year you got a refund, you want to make sure you do a 2210, a Form 2210, to eliminate the penalty.
That's right. If you
just attach that form to the tax return, and the penalty for underpayment goes away.
That's right. So because why pay a penalty? Because the year before you had a refund and you weren't in that situation.
And a lot of people go, what do you mean they're going to charge me a penalty? You cannot owe them more than $1,000, this federal government, without them assessing you a penalty. That's why people do quarterly payments.
The IRS likes their money in equal periodic payments throughout the year.
Right, unless you earned it all in the last quarter. And the other thing is, and again, we're talking kind of potpourri, if you paid the state of New York money last year, or any state for that matter, don't forget to take the New York State payment that you made on the previous year's tax year for New York State in that next year, in 2017, and put it as an itemized deduction.
Yep. That's right. That's exactly right, because people forget to do that all the time. And then don't forget, if you paid taxes to another state, you can do a 414H on New York State for paying taxes to a different state and reduce some of your tax bill to New York State.
A 414H. Boy.
You know what I mean.
No, I have no idea.
218.
1120, 112R?
112R.
Jeez. Okay.
Sleep. I haven't been getting much sleep.
I think she does need to take a little nap. I'm Esther Golias, the tax lady from AG Tax, 803-0930, 803-0930, star 930 on a cell phone, although these numbers do kind of mush together.
112R.
112R. That's you take. So let me just say it again so in case you don't understand. Let's say that you were working in Ohio and you are a New York State resident. You have to do an Ohio return. Then you find out what your true liability is for Ohio. You get a credit for the taxes paid to Ohio on your New York return by doing a 112R.
That's right.
Is that good? Did
Thank you. That's why we're a team.
I'm Esther Golias, the tax lady, 803-0930, 8030930, star 930 on a cell phone. Okay, let's see. What else is some things? All right, you make sure you're using the correct filing status.
Mm-hmm.
If you're single and you're maintaining a home for a qualified individual, which would be your child, your brother, your niece, your nephew, your mom, your dad, any qualifying relative that's your dependent, then you get to move from being single to head of the household. That would increase your standard deduction and you get an extra personal exemption. And it reduces your tax rate. So if you're single and you have a qualified individual in your house, I had a client the other day, his brother is one of the victims of the opioid epidemic.
Mm-hmm.
And his brother is just like completely strung out on opioids, and he's really just crashing in his brother's house. And he said, I had never thought of claiming him, but he had made not a dime last year.
And he didn't help with any of the household bills or household expenses.
Oh, no. So people don't think about those situations and changing their filing status, which is really important. And the other thing is debt cancellation.
Mm-hmm.
If you a lot of times on TV they'll say, let us help you to get rid of your debt. Well, if you get rid of the debt, then that's debt cancellation, and debt cancellation can be taxable. In most situations, it is taxable.
That's right.
However, there's many situations when it's not. Right?
Yep. If you were insolvent and you can prove that you were insolvent for the tax year, then you can do a Form 982 and not pay tax on that cancellation of debt income.
That's exactly right. So that means at the time that they said, yes, we're not going to collect on this debt, maybe it's $10,000 from credit cards, they then send you a cancellation of debt form that says it's taxable. If at that point in time, when you take a look at all of your assets, you say, well, I have no assets. All I had was a liability. I got a used car and a bunch of credit cards. Well, then your liabilities were more than your assets. And if you do the Form 982, then you have the opportunity to make that not taxable.
Yep.
And that's a big deal as well. Let's see.
And then there's some people that have lost their personal residence because of bankruptcy or foreclosure.
And that also
would go on a 982, so
right.
you don't have to pay tax on that.
All right. I'm Esther Goulias, the tax lady from EG Tax. 8030930, 8030930, star 930 on a cell phone, and we're going to talk to Sally. Hey, Sally, how are you, ma'am?
Hey, how you doing?
Good. What can we do for you?
I listen to your show every week.
Thank you.
Question is, I turned 70 in December, and I took some money out of some different stocks and stuff, and then an IRA. And does that qualify for my RMD already?
All right. So when do you turn 70 and a half?
Not until June.
All right. So when you took the money out in 2017, that didn't fulfill your 2018 RMD because it's in the year that you turned 70 and a half that you have to start doing required minimum distributions.
Okay, I took it out in January.
Oh, okay. Well, then when you take a look at the value of your IRA as of the end of as of December 31st, and you divide that by 27.4. If the amount you took out is greater or equal to that, then you've fulfilled your RMD.
Oh, great. I got a letter, and I said I took it out in January, and I thought, and I only had $2,000 in this one IRA, and I took $1,000. I said, well, wait a minute,
Mm-hmm.
But it's all your IRAs, though, Sally. Is that the only IRA you had?
I also took money out of other IRAs, but I know I was past the RMD,
Okay, well, again, you add all your IRAs together collectively as of December 31st of 2017 and divide them by 27.4. Then it gives you the required minimum distribution. And if you've done that over all of your IRAs, if it's greater or equal to it, you're good to go.
Okay, good. Hey, I just wanted to tell you, last year, 2 years ago, I had called the show, and you had a real bad cold. And I was telling, my daughter's a pharmacist, and she was telling me about using Vicks on your feet. And I was the one that called and told. I don't know if you ever did.
Actually, I did do it.
Okay, well, I was the one that called about.
Oh, well, thank you, Sally.
Did you say to put it on your feet?
On your feet.
Oh, cool.
Yeah, and just with socks. Oh. My mother used to put it on my chest.
Yes. Hey, happy Easter.
Thank you, Sally. God bless you, too. Bye-bye. That's true. I don't know if Vicks on Your Feet works, but it doesn't hurt, right?
Right.
All right. So before we take other calls, 803-0930, 803-0930, star 930 on your cell phone, want to talk about some non-taxable items that people may not be aware of. Gifts.
Mm-hmm.
When you receive a gift or you give a gift, you can give up to $14,000 per person per year without having to do a gift tax return. When you give a gift to a person, not to a qualified charity, it's not deductible.
Correct.
Because it's not taxable to the recipient.
Yep. A lot of people will say, but doesn't that help? No, it doesn't.
Right. Expense reimbursements. If your employer reimburses you for qualified business expenses, that expense reimbursement is tax-free.
Mm-hmm.
Okay? It provided you gave the receipts and everything. Education reimbursed by your employer up to $5,250 is a tax-free benefit.
That's really nice.
And a lot of people don't know that as well. And life insurance proceeds.
Mm-hmm.
When if you're somebody who has the recipient beneficiary of a life insurance policy, that those proceeds are tax free. Now, don't confuse those with annuities. An annuity would be something where you bought an insurance product, and it may have a life insurance component. But the life insurance portion would be tax-free, but the investment portion would be partially taxable on the appreciation.
Mm-hmm.
All right?
Gain.
Let's go to the phones. We talk to Laura. Hi, Laura.
Hi.
Can we help you?
Yes. I have a question. I bought my first home this year.
Congratulations.
Thank you. And, well, last year, I'm sorry, 2017. And I paid the down payment by taking money from an inherited IRA.
Mm-hmm.
Now I have a very large tax bill.
Yep, you do.
Yeah. And so there's no credit or anything anymore for buying a house.
No, that's not true. It's not that it's not a credit. When you own a home, there's only two things that are deductible: the property taxes and the mortgage interest. And the PMI and points that you paid to acquire the mortgage. So let me ask you this. May I ask your wages approximately, Laura?
I was actually out of work the last part of the year.
And did you have any wages at all last year?
Yes, about $35,000 from January to May.
All right, and how much did you take out of that IRA?
$170,000.
And there is no more new home buyers credit. That was only around 2008 and 9.
So that's now. When did you take the 170 out?
In increments. I took 140 to pay the down payment, but the other money was kind of the last.
Well, let me tell you where I was going. Had it been less than 60 days, you could have maybe do a home equity and roll it back into the IRA, which would have made it completely tax-free. However, since you've had it for more than 60 days, there's nothing much that you can do.
Avoid the penalty because it's an IRA?
Yeah, there's no penalty.
Yeah, there's no penalty on it, Laura.
But $170,000 is a pretty serious thing.
She's
at $205,000.
Yeah, and it's a death benefit, so it should be coded as a 4.
Yeah, so your prepaid, the taxes you paid at closing, we'll look on your closing document. There, you reimburse the seller. That's where the property taxes are. And you have no mortgage, I'm assuming?
No, I do have a mortgage.
So then your mortgage interest, and if you paid any points to acquire, or if you had, and you can't do the MIP because she makes too much money. So that would be it. So hopefully you can itemize and it'll help you a little bit, but it's not so hot. Okay, but what's important is how many beneficiaries were there? You and anybody else?
From that account, just me.
For the inherited
just
IRA.
her, she said.
Just you. On the state of New York, the first $20,000 is tax-free.
Oh, okay.
So that'll save you a little bit, too. So between everything, if we cut your tax bill right now by a couple $1,000, that's good, better than not.
What did you say about the closing, not the points, but the taxes that I...
All right, on the closing statement, you reimburse the seller, if it was in a pre-existing house, for property taxes because property taxes are paid in advance. So when you take a look at that settlement statement, take a look at it'll say county taxes so much per day, and there's a figure. School taxes so much per day, and there's a figure there too. So your settlement statement, make sure you pour over that to make sure that you take everything that you possibly can.
You want to look at your loan disclosure,
right?
And the loan origination costs are deductible also on there. So your closing disclosure.
Okay, yeah, I'll have to have a look at it. Thank you very much.
All right, thanks, Laura.
Thank you.
Bye-bye. I'm Esther Gulius, the tax lady from EG Tax. Let's go to John in Buffalo. Hey, John.
Hello?
Hi, how can we help you, sir?
Yeah, I just did my taxes today, and I have a quick question.
Yeah.
Last year, when I finished my taxes, I owed $1,500 to the federal.
Mm-hmm.
This year, I then got a second part-time job where I would earn $10,000 more.
Mm-hmm.
And doing my taxes, I now owe the federal government $6,000.
Okay.
Is there?
Are you on Social Security?
No, I'm not. I'm retired. My wife is working, and I have 2 part-time jobs.
Okay, but nobody's on Social Security.
No.
Okay. Well, you're like a perfect example of somebody that might want to avail themselves of that IRA, because if you have some money, do you have money in the bank?
I do.
So take a look at a traditional IRA. Is your income under 100? Under 100? Let's see. Where's my stuff here? Under $120,000?
Combined, no.
Then it's a problem.
Okay.
Yeah. Because there's a phase out. And
he said combined, it's not over that.
Oh, combined, it's not.
No, combined, it's 130.
Yeah.
Oh,
okay.
sorry.
I thought then that won't work for you. So without looking at your return, I really can't say. Does your wife have a pension plan at work?
Yes.
You might want to do married filing separate. Sorry.
Yeah, you might want to look at married separate.
Married separate.
Yeah, give that a shot.
Because right now I'm considering quitting that second part.
No, that didn't have anything to do with it. You weren't withholding properly, that's all.
Okay.
All right, John. Thank you, sir.
Call us if you need help.
Yeah, that's right. I'm Esther Gulius, the tax lady from EG Tax, 8030930. I can't take any more calls because we got to go back to the office. I want to let you know some other tax-free things. Lawsuit settlements from personal injury. So the ambulance chasers on TV, that's tax-free money. Workers' comp, tax-free. VA benefits, tax-free. Welfare benefits, tax-free. Child support payments, tax-free. Soon to be alimony and
new divorces.
Divorces after 2019 would be tax-free. Lodging on an employer's premises while performing duties, that's tax-free. Qualified disaster relief payments are tax-free. And scholarships, which pay for education, are tax-free. But if your scholarship doesn't pay for education, then it's taxable, like, for instance, if it pays for housing. So you want to make sure that if you have an opportunity to steer what the college is paying, have them pay for the education
and
and
fees.
not for the housing.
That's right.
Right? So, all right, so until next week. And by the way, if you need any help during the week, like you're stumped, you need something, a question answered, you can go to our website at egtax.com, ask the tax lady, put in your question, and we will get back to you as soon as possible, usually right away, to answer your questions. The important thing is, in our gentleman's situation, he needs to look at that return long and hard before he pays that liability, because married filing separate in his situation might work real well for him.
Going to work on one right now when I get back.
That's right. So until next week, I'm Esther Gulius, the tax lady with Tiffany Fabian. If you need the best tax help, I hope you would give EG Tax an opportunity to serve you, and have a great week until it's Easter next week, isn't it? Yeah. Have a great Holy Week. God bless. Bye-bye.